All right, Kathy, I like the graphics.
Oh, you do?
Yep.
Okay, there we go. That's better, right?
Looks great.
Okay. One of those topics that's high on everybody's list is, how to reduce your taxes. One of those topics that's high on everybody's list is, how to reduce your taxes. And especially in the crypto field. So that's what we're going to talk about today. So I just want to start by saying this information is not intended as financial or tax advice, that it instead is to guide you and share insights you might not be familiar with and clarify aspects you may already be familiar with.
Thank you.
Yeah. Okay, so basically what I'm going to do is give you an overview here of the 11 ways to reduce crypto taxes in 2023. These are the things we're going to talk about, and it may be too much for one day, I don't know. But harvesting losses, long-term investing, take profits in low-income years, give crypto as gifts, give crypto donations, buy and sell crypto in your IRA or 401k, hire a CPA that specializes in crypto, take out a crypto loan, move to a low tax state or country, keep careful records of crypto transactions, and leverage crypto tax software. So are those interesting topics to you all?
Very.
Okay.
Yeah, those are perfect.
Okay. So number one, harvest your losses. So I wanted to put on here that it's important to know that nothing happens until you sell something. So it requires, in order for you to have capital gains or capital losses, there has to be something sold. The tax loss harvesting is intentionally selling your crypto or other assets at a loss. And then you can use those losses to offset capital gains on other cryptocurrencies, stocks, other assets. And then there's an additional $3,000 that you can write off towards your income. And then if the net loss is more than the capital gains offsets, you can carry forward those losses to future tax years. So using the losses to offset your capital gains on these other things, those have to be sold in order for there to be a realized gain. So you have unrealized gains and realized gains. Taxes only happen when there's a realized gain, when something is actually sold. That's an important distinction here. And cryptocurrency is unique, has a unique advantage in tax loss harvesting in that there is no, they're not subject to the wash sale rule. And in securities, if you try to sell something and then buy it right back, you aren't allowed to write off the loss. It has to be 30 days before or after that you buy the other stock, the additional stock. But in cryptocurrency, you can sell it one day and buy it the same day, or buy it before, buy it after.
See, this is an advantage. This is an advantage to crypto user. So Kathy, I would like you to have one page about this. See, this you need to have, I would appreciate if you have one page about this and compare with the stock market. You have a limited window, or you have a limit when to sell, when to buy after you sell off certain things. This is beautiful. This is giving the crypto such a beautiful comparison.
Yeah, it's an advantage. So here's a kind of a diagram to show how the wash sale rule works, stocks versus crypto. So You see, can you see my cursor?
Yes.
Okay, so right here, he buys the $1,000 of stock, and then the value of his stock goes down to $500. And then he buys the stock back immediately, and he's not able to claim the capital loss in the securities market. But in the crypto market, you can buy it for $1,000. If it drops, the value drops to $500, you can buy it back right then, and you can still claim the loss. And the beauty of this is that, you know, as things go up and down, there may be, you may hang on to it and then it eventually comes back up. But if you sell it while it's down, you can actually harvest those losses and write off the losses against any gains that you have. So if you do have, let's say, a lot of Bitcoin and you want to take some of that off the table, you want to sell some and use the money from that sale, you can actually help your tax, and you can wait until toward the end of the year also to see overall what your gains and losses are. But if you get to the end of the year and you see that you have a lot of gains, you can actually go in and say, do I have anything I'm holding right now at a loss? And even if you like that company, you can sell it at a loss, realize the loss, and use it to offset the gains for tax purposes.